Hello, and good day to all friends. This is Mojtaba Rasti from the Thales team, and today is December 12th, 2025. And I'm here with you with a midterm analysis targeting the expiries of December 26th and mainly January 2nd and January 30th. Using the Thales Market Screener tool, please note as always that these analyses are for educational and informational purposes. If you use them to take positions in the market, the responsibility for any profit or loss will be entirely yours. All right, let's go to the market screener and see what we can find. For the coming month, in a significant way, traders' perspectives often tend to get thoroughly refreshed at the very start of each new month. And another crucial point to consider is, look closely, this was indeed a clear bottom. After observing this distinct bottom around 80,000, there was a noticeable upward move. Then again, a relatively strong and sustained downward move. Here we clearly had a solid bottom, where we effectively found strong support, and subsequently moved up, a kind of significant rebound. Another extremely important point to highlight is the fundamental change in various policies. I think it was around this date that the Federal Reserve, if I remember correctly, announced it. Basically, the end of the QT policy was officially declared. So this isn't a bad spot. This isn't a bad place at all. It's also the beginning of the month for us. We consider it from the 1st of December until right now for the expiration date. On December 26th, as a first step, the database was processed and the open interest was set at 1. The positive open interests have been taken into account, and we're facing this kind of volatility. The volatility ceiling is 98,500, the floor is 80, and the profit is somewhere between 88 and 94. Now let's move the slider forward and see how the changes happen as soon as we move. Well, you can clearly see that we have successfully identified two distinct and significant peaks, one prominent profit peak at precisely 115 units, and then another notable peak located further down here at exactly 87 units. Excuse me. Alright, let's keep going forward. The Saudi League is coming up. See, this Saudi League went up. Maybe we can say even the curve is in a state. Actually, it developed a spread, meaning it's as if traders have targeted a point up there, around 119,000. They've set that as their maximum profit target as the price moves up, and not beyond that. In other words, they believe. We go up to about here, up to around 118 to 120. That's how it goes. If you look further ahead, does it become bullish here? I mean, right here? Now, look at the delta. See, we're at a bottom. Look, this is where the selling of puts starts, and its peak is here, where it goes into profit, 87. So we have a bottom somewhere around 5 to 87 on paper. We might still touch it, but the bottom is there, and moving forward, we have an increase in delta. Of course, it enters profit very gradually and in a curved manner. Look, from 111, 112, and above. Here, it becomes even more bullish, and this bullish curve intensifies. So, for the end of December up to this point, we can say that we can have a bottom around here. We might see 86 to 87 again, and then a move toward, in fact, 98 to 100,000 and higher. Just like we saw at the beginning. In this range of 8, our trades went up to 118 as the apparent maximum profit. Okay, let's move on to the next maturity date. There are few trades for the 2nd of January, because this maturity date has just been opened, and I think its trades only started a day or two ago. Well, you can see that the overall curve is very volatile right now. From here upward, our delta is positive up to 103, but then we continue. You can see it in the losses. So the premium has to be paid, and this upward movement needs to continue. It reaches the peak profit at 109, which is where it goes into profit, but the delta curve is downward from there. That means call selling starts, meaning a ceiling is being. It sees it and kind of stops there. Let's move forward. Of course, nothing changes here because, as you can see, recently from here, trades have opened for January 2nd. All right, let's move forward. You see the bullish leg is coming up. Now, our delta curve shows that we can move upward. We can go up to 104, and around 109 or 1809, as we mentioned, we could reach the ceiling. On the downside, we could go down to 82 or even lower. All right, let's go further. The bullish trend becomes even more apparent. Look, this leg goes up and again shows the delta peak around 106. We have a breakout here at 110, which again shows its significance. And here it basically becomes a spread with 723 Bitcoin targeting 109. So for January 2nd, you can see that the number is around 108 to 109 on the upside, which is our dominant side. Right now, we believe that the price movement will be upward. You can see that it takes on a spread-like form for 108 to 109 for January 2nd. So we can also readily obtain this particular perspective from January 2nd. Now let's move on to January 30, the end of January, the very end of January. Look, it has a situation where both sides of the curve are elevated. From the beginning of December, if we consider it, the downside also actually shows a stronger intensity in the movement in profit, but from above. We're in profit above 120,000. And we're in profit below 76,000 from the bottom. All right, let's move the slider forward. You see, the downside starts to significantly dominate and become much more apparent. Lower than 80, and you could say from 93 down to 80. Here, look, from 93, it's almost tangent to the midline, right? Let's move forward again. You'll see things are still more in favor of the downside. Let's go further. The bullish leg comes up a bit. Let's continue. Above 137, no. Here the dominance is still with the downside, meaning that by the end of January, we might see a reversal. If we're supposed to go, say, until late December or early January, around 110, 115, then logically it should move downward again, and we should see a correction. Now, for the 30th of January, maybe that's a bit early. Maybe we'll let more trades happen, and towards the very end, the bullish leg comes back up again, and once more, we see volatility. Very significant. It shows us a range between 75 and 119, 120. We've witnessed a volatile situation. And finally, let's take a look at February and March also look more volatile, but overall it's more of a selling trend, though you could also go for a call. You could interpret it as the ceiling being at 112, actually 112.5, with the peak profit at 100,000. Here too, we don't want to go below 81. It's still volatile, as you can see. It goes up here, the floor is 85, and the rest heads toward profit. And here, toward the end, it comes down. It drops to 117,000, which is like a call sell, with a ceiling at 117,000. Here it goes up again, so for the longer expiration date. Naturally, the margin of error increases a bit. We need to allow for some trades to come in. Of course, look here, everything is interesting. Here too, it's as if, look here, 139, because our downside went all the way to 60, even 59. If we zoom in on the curve and look at it this way, you'll see there's a profit peak at 139, 140. Of course, the trading volume is low, let's say 880 BTC, but these can't give us some signs. All right, let's go to that same last expiration date, December, and let's increase the size. Let's take it from 50 Bitcoin to 100 Bitcoin, since there are 97. We still need to increase it because these aren't really reviewable for us. They're just too much. Whether the specific amount is 25 Bitcoin or perhaps 150 or even 140 or a smaller quantity like 30, the exact numerical value truly does not hold significant importance in this context. What truly matters is the underlying trend. We consistently observe a substantial and frequent occurrence of orders, specifically those involving 100 Bitcoin, indicating a clear and persistent market activity. Look, from 28, there are over 120 Bitcoin. From 29, over 110 Bitcoin. When we set it to 100, it becomes a lot. Alright, checking 97 is a bit difficult. Let's just set it to 110, and you'll see again. The situation is the floor is at 72 after 90 seconds, and as we move forward, the ceiling is at 98 and above. You see, as we move forward, this volatility continues. The floor goes to 83, the ceiling goes up to 102, and here again we have another move forward. The floor is 83, the ceiling is 101, 102, and our ceiling is 106, and 500. Let's take a look and see how the strategies are. The trades. Well, this 600 is one of our most accurate trades, where a short call at 95 was taken. Actually, it was taken for December 26th. On December 1st, this was taken, seeing the ceiling at 95 on December 1st. For the end of December, which I think was taken here. I think that, I don't know, maybe now, looking at it, this trade has gotten a bit old. Anyway, let's check out the rest and see what we can find out. Well, these aren't the strategies. This one is. I think this is it. Yes, do you see this? This is Actually, I think this counts as a backspread, a ratio, and it's targeting 105,800. It's targeting 105,800. This would be a short backspread, if I'm not mistaken. It's targeting 105,800 for December 26th. This one has also been entered as a single position. So this shows us a bullish move. What else do we have? Not this one either. This is it, really. This one is bearish, actually. This is a strategic risk reversal maneuver that is specifically targeting a price point below 88, indeed significantly below 88, with the intention for this to be achieved by the conclusion of the trading period in December, specifically for the end of December. Of course, it's also considered the fluctuation between 90 and 101, 102. Meaning, from this side, the trader has considered up to 102 in case the price increases and has managed their loss. Here, actually, there won't be a realized loss. This one? No, sorry, I think I made a mistake. Yeah, not this one, it's with this one. Oh, were these two strategies? Yes, this and... Let me see. 25, 24, 23. This one is here too. Actually, it's SEPA. Looks like 25, 60, 75. And yeah, these are SEPA, right? Well, this one is also the same. A bearish situation. But it's really low, 75. This is 75. Which has also been recently added. This particular item has also been quite recently added. 75. This one is a bit of a warning sign. Now, interestingly, we have to see that you might see now until the end of December, we might be in this situation here. It's possible that from here, we could see a sharp move downward, meaning the path we took going up, here we made an upward move. This correction we're talking about could be a deeper correction, so we have to. Let's see what it's going to look like. Well, apparently we don't have anything else. We don't have any other strategy. So overall, we had a bullish strategy here, which was, I think, yes. For example, 750 Bitcoin targeting 106, and that warning I mentioned, which was 1, 2, and this particular block, which is actually 3, and it was a significant one. Its peak profit is on it. Actually, a significant 75% are individual, distinct trades. Well, the rest of them are all individual trades, you see. Okay. Let's move on to January and see if we have anything for January. January is interesting too for the 2nd of January. We have a bullish spread, 110,000 for the 2nd of January. We have a bullish spread, 110,000, which we can, because it's right at the end of December as well. We can consider it as the end of December. We can consider it as the end of December. And this is good. 200 in total and 500 Bitcoin. That's really heavy too. Now, let's say we reduce this size to, for example, 50. Let's see if there are more strategies for the 2nd of January. Look, for example, we have this one too. This one is also a bullish SPAD. 110. This 250 was the Saudi spread. 100 in. Then there's this particular thing too. No, this is quite different. So let me explain. This is a bearish spread with less volume, of course. Bitcoin Divisi 80 to 2, January 80. And we don't have any more. We don't have any more. Well, this is for the 2nd half of January. So look, it looks like another low is opening, which means it's possible. Here, this 94.5 that we mentioned, when we saw it, we might even see a sharp move downward. But you saw a few strategies that were around 110, 108 to 110. For the end of December to early January, at the end, they also saw around 108 to 110 until early January, but, well, one or two. We also had a couple of notable bearish outlooks that. It seems that before then, we might have one or two more dips. All right. So that's for January 30th. On January 30th, there are a lot of 50 Bitcoin positions. Let's make these 100. Most of them are at 110. For more than 110, there are 20 positions. We have trades for the end of January. And this is very accurate. Look, this is for the end of January. 1200 short call at 112. So until the end of January. So this 110 that we're talking about, it's until late December or mid-December. In January, it might happen around that time. Look, here on December 1st, someone took a short call position for 1,200 Bitcoin at 112,000 for the end of January. Again, this is 150 Bitcoin short call at 112,000. This one, of course, is a long put for 250 Bitcoin at 80,000 for the 30th, January. If you look at the overall picture here, let's look at the whole thing. The upward slope is a bit steeper, just a bit. But there are two perspectives in the market, apparently two viewpoints in the market. Here. 152, 153. In this one, oh, these are strategies. 24, 87, 31. Yeah, so it's heavy, right? In this, what kind of strategy is this? Long call. Both of them are long calls. Why are their blocks the same? Both are long calls, one at 115,000, the other at 118,000. The difference is 2,200 Bitcoin. For the end of January, one wants above 115,000 and the other wants above 118,000. And it's really heavy, really heavy. So this also gives us a bullish outlook. 250 long put. This one is set really low. This one for the end of January has taken a 250 Bitcoin long put with the term 55. It's from those who probably believe the market is over, or by then, yeah, we've already seen the top. Again, here's the strategy. This one's a spread too. A heavy 2000 Bitcoin spread. Bullish. For 130,000. Yeah, look at this guy. See how bold he is? For 130,000 at the end of January, he entered on December 4th. Entered on December 4th, aiming for 130,000 by the end of January. I This one's nothing. This one's nothing either. Oh, here, I think. This is probably an iron condor, since it has 4 legs. Or, yeah, it's an iron condor. Look at this. It's an interesting iron condor where 88, quite interesting indeed, 95, 96 are carefully set in the 9 range. For the end of January, with a total of 1,200 Bitcoin, for the end of January, they're expecting volatility between 88 and 96. Interesting. You can see both perspectives are present in the market. Both views are out there. And in my opinion, this goes back to the complicated situation that kind of exists right now. If you look into it, there's a lot of debate. Some people say Bitcoin's cycle is still in play. And according to Bitcoin's 4-year cycle, we're at the end of the road. In my opinion, the point right now is that this uncertainty in the market is because of this. Some people believe the 4-year Bitcoin cycle is still ongoing. Sorry, that it's following the cycle. And according to the 4-year cycle, 2026 is supposed to be a bearish year. So we're done. We've already seen the top. But others say no. The game has changed. With the arrival of Bitcoin ETFs and digital currency ETFs, the game has changed. Institutions have entered the market. Then, in fact, an expansionary economic policy is starting, meaning they're basically injecting money into the market. I mentioned a while ago that Mr. Trump said that around mid-2026, the money he mentioned will be given to every American in the form of a $2,000 check. One of the reports said he pointed out that this will happen around mid-2026. Well, that's a lot of money being injected, and it doesn't add up for money to be injected in the middle of a bear market. So I think some of this uncertainty comes from the current situation you're seeing right now. We have some traders who are strongly bearish, and we also have traders who are bullish. They're bullish, and from the Republic of Iroquois, they believe that until the end of January, we'll be fluctuating between 8,000 and 9,000. Look, it's interesting, but here you see a strong bullish sentiment. Here we have several strong bullish views. I mean, this bullish spread has even reached up to 130. All right, let's also take a look at February, since we're nearing the end, and this video is getting long. It was for 100 Bitcoin and above, right? We set it for 110 Bitcoin and above. You see, the ceiling here is up to 132. The peak profit is at 110, and the ceiling is at 132. Again, here you see a move in either direction doesn't really help us much. And here, we don't have anything either. Yeah, here too, we don't have anything. No strategy. Unless we set this to 50, which is a lot. That's it. They just showed their reaction. $30. Okay, let's move on from this. Will it take long? So overall, it seems like we might have another drop, and now there are some trades with a relatively significant bearish divergence for the end of our positions as well. What fluctuations? Basically, it's just around here, where we've come around this area. For example, this upper level we mentioned, up to about 95. After this point, you'll probably see another drop, and this drop might be a bit sharp. There's a chance we could come down again to 84 or even a bit lower, and after that, it looks like we can expect a move toward 110, 108, 110, those numbers. By the end of December, or say early January, we could go up to around that level. Actually, 110, 112, even as they say, you can see a trade up to 115. We could probably move up to those numbers by then. Now, as you've seen, there are traders who, since Friday, with that bullish spread, are targeting as high as 130,000 by the end of January. They believe the price could reach that level anyway. Maybe we can consider this as one possible scenario. We still need to move forward a bit and update this to see what happens. But it seems like the market still has another dip up its sleeve for us. Maybe that's what we should expect. Thanks for your attention. I hope this was helpful. All right, until the next analysis, goodbye.